If you have never done tax planning in the past, 2020 is a year that you should. Not only you're going to save taxes, you also have potential to bring the tax payment that you made in the past all the way back to your bank account. It is worth of your time to invest in this webinar. You will learn and you'll do better. Plan your 2020. And the CARES Act stands for Coronavirus Aid, Relief, and Economic Security Act. So it's already gone through the whole process of introduction, approved by Senate, approved by House, signed by President, becoming the law, right? So this is the law. And this particular law had overwritten quite a bit for Job Act that came out in 2018. So for that reason, I'm not talking about you go back to fix your 2018. You don't have to file amendment, but some of the benefit you need to know, so you can file a different form with your 2020, you can get money back from the past. So this is what I'm trying to say, that CARES Act is important. 2020 tax planning is even more important. Make sure you do something about it. So that became the law on March 27th. Okay, and so in here, I have total of 13 points I want to, I took out of the CARES Act, knowing that it's applicable to medium-sized small businesses. But here today, I'm only going to cover few of them, which is so important to everybody. If you have business or don't have a business, your business is small and a medium size, it is going to be useful to you. There's some of those points only large business will deal with it, so I am not going to talk about, but I do have them in the slides, so I quickly go through with you. Now, this one, I am not going to spend a minute because you already got your stimulus check. That is what CARES Act introduced. But knowing that you're going to file that money on your tax return, it is going to be part of your income for 2020. Okay, so that's it for that point. And number two, what I want to tell you is in 2020, in this year, when you take money out of 401k plan, and maybe your employer had a 401k plan for you and you want to draw that out, see, as long as you are diagnosed with COVID-19, your spouse or dependent is diagnosed with COVID-19, and due to COVID-19, you got laid off, all of these eligible reasons, eligible points would give you a good reason for taking the money out of 401k without paying the 10% penalty. Right? Assume you're not yet to retire yet, so you can take out, and for the first 100,000 distribution in the year of 2020. So right there, you want to know that is special for 2020 in case you need to do that. And number three is RMD, is the mandatory withdrawal. I'm not going to take too much time on here just because you just need to know that if you have a mandatory withdrawal from your retirement fund, you don't have to do that in 2020. And especially if you don't want to pay taxes, return it back and you don't have to pay taxes on that. And this is the one I want to mention, donation. Okay, in 2020, and a donation is what we call above the line donation, which means that you don't have to include that in the Schedule A. And remember, standard deduction had already raised the bar. And so it's so high that a lot of people couldn't really benefit from donation anymore. You did or not doing it, it doesn't matter, doesn't make any difference. But in 2020, here it says it's called a universal deduction. Okay, there's a universal deduction for donation up to $300 or $600 for married file jointly. So this is where that you can take standard deduction, but your $300 or $600 is come above that. So the tax form will have that line for you. Right now, you don't see it because the tax form is not updated yet. But when you file 2020 1040, you suddenly realize there's a new line. So when you see the new line, and you can put in the donation you did, and for homeless shelters, food donation that you have done over the year as a good citizen, you helped your neighbors. Okay, so then those are the things that make sure, and you can deduct that above your standard deduction. So I want to mention to you about that. And then number 5, it is the student loan stuff, and so we don't need to worry about that. Now let's talk about business related, CARES Act related to business incentives. Okay, there are 8 points I want to quickly go through, but there's several that you already know. For example, this first one, this is PPP. You already got PPP, right? And when you got PPP, you know that when you file your taxes in 2020, and you need to know how to deduct the expenses out of your income, taxes out of your income, and also how to treat the PPP loan. And I have a webinar actually specifically talk about that. So this is CARES Act number 1, PPP. And the CARES Act number 2 for business is the employee retention credit. This is the tax credit that offset your payroll taxes if you did not receive PPP. So most of the people don't use it because we already got PPP and that doesn't apply. But if you got, if you listen this Saturday, I'm having a webinar called Fiasco of Payroll Taxes. So this is creating a lot of problem for some employer. So I will cover more details this Saturday. And business number 3, CARES Act, is related to payroll deferrals. And remember, and you could defer Social Security payment, the employer portion, the 6.2% that you match to your employee, you can defer that, okay? And started to defer that, that's starting point is March 27. And you defer all of that Social Security money all the way to December. You pay that in 2021 and then 2022, 50% in December 2021, 50% in December 2022. So how are you doing accounting? I want you to be aware of that because you already have payroll expenses, right? So you have a payable that waiting to go out next year and the following year. And if your tax return is on cash basis, that's one way to file your taxes. If your cash return is on accrual basis, it's another way to file your taxes. So you kind of need to make sure that you understand how you process your taxes. So you should, if you're on accrual basis, you should include those expenses even though you didn't pay them yet. So make sure you are aware of that deferral tax benefit for your business filing. Number 4, net operating loss. This is something that together with the number 5, which is limitation on losses. And generally speaking, there's no more limitation on losses. The CARES Act really want you to get cash flow into your business. So they're saying that you can have net operating losses you get in 2020. You can go back 3 years to get that loss back. What does that mean? Okay, let's figure out what that means. So basically, the CARES Act allow you to take the losses from 2018 and the 19 and the 2020 tax years to be carried back to previous 5 tax years, beginning with the earliest year first, okay? So the 5 back years, what they are. And for example, the corporation NOL for 2020, and that would be offset all the way back from the 2020, from 2015, and which may be subject to, on the 2015, those income you paid will use to offset the losses you're getting. So at that time, maybe you were paying 35% of taxes, then all the tax dollars will come back to you. So this is how the CARES Act spirit, you call it. They want the business to get the cash flow right away. So that's what they want you to do. So on here with the limitation, so let me summarize the 3 things that happen related to net operating loss. So number 1, and the CARES Act provided a 5-year carryback for losses earned in 2018, 2019, and 2020, which allows the company to modify their tax returns up to 3 years prior to offset taxable income from those tax years. Okay, so I mean 5 years prior. Did I say 5 years prior? I want to make sure I said it right. It's a 5 years prior, start from 2015. And number 2, CARES Act suspended the net operating loss limit of 80% of taxable income. And this means that the company may deduct their NOL to eliminate all of their taxable income in a given year, instead of having to only offset 80% of the income, leaving the 20% to the future. No more. You can offset all of it. So that's number 2. Number 3, pass-through businesses. Okay, those are partnership, S corporation, may use NOL to offset their non-business income above the previous limitation of 250,000 single and 500,000 jointly, and for 2018, 19, 20. So in 2018, if you had a big loss and you're a partnership, so you actually brought the loss to your 1040, but on your 1040 you have no business income, and then your losses would offset business income only in the past. Now they say, no, don't worry. Do you have capital gain income? Do you have a dividend income? So those other than business income, those non-business income, and is no longer subject to the threshold. So you can offset them. And the 250,000 threshold, that just means that if your losses is over 250, and then if your loss is over 250, you capped under, you cannot go over. If it is jointly, it's a 500,000, you capped under, cannot go over. Even though you still have income, you can offset, you can't, because there is a cap. So they took that one out. So those are big changes related to my business number 4, business number 5, folks, okay? Then number 6, that's related to minimum tax credit, large corporation deal, big deal. If you are a large corporation and you have, that's a huge tax benefit. And then the number 7 is modification of limitation on business interest expenses. So that again, really belongs to large corporation like airline industry. They borrow so much money, they pay so much interest expense. They used to have a cap. You cannot deduct so much, but they took the cap out. So they raised the cap. The change raises the amount of deductible interest from 30% of ATI to 50% of ATI. And the taxable income, adjusted taxable income is ATI. 30% just means that if you make $100 and 30% of 100 is $30, so you can deduct up to $30 for your interest expense. If you have more than $30, you cannot deduct it. Now they raised to 50, a large business deal. The number 8, which is the last one I have for this section, it is really, really important. If you recall, back in 2018, if you did a retail store leasehold improvement, you spent $250,000 to renovate your store, you went to the accountant, you want to deduct it all, your accountant goes, oh, well, too bad, so sad, you cannot do, because Job Act changed it, you can only deduct 39 Divided that by 39 years and give you a little bit. That's a sad news, right? And you experienced that in 2018. So now the CARES Act said, oh, well, we're going to reverse it. So in 2018, if you did that, just file form 3115 and we will reverse that for you. So there is a treatment on the tax professional side to make sure that you can catch up on your depreciation and then you pay less taxes. It's another way to put cash in your pocket. You can depreciate your leasehold improvement, your qualified improvement property, and 100%. All right. So that is where we are with CARES Act, and know that CARES Act is our friend, and we want to know all of things they put out there. On individual side, we have 5 items. On business side, we have 8, total of 13, which is the one I summarized up for you to help you to understand what's going on and know to ask good questions to your tax preparer. If they're the one doing your taxes, you felt like you're paying too much taxes, it's very good to know whether they have updated your tax with CARES Act incentives. Okay, and if your tax preparer just don't even have time to study, and they're still talking about 15 years old tax incentives, then it's time to move to a community CPA. What's wrong with coming to us? We study what's there and we help you, we save you, and we save you more than what you expected, and we work really hard for you. And know that we have free Zoom webinars at 3 p.m. every day. So on Monday is in Chinese, Tuesday is my 30 minutes, and sometimes we do other things, but we always have it. On Wednesday is Vietnamese, and Thursday is always a webinar that we invite other people to talk, anything related to small, medium-sized business owners, families, concerns. And if you are out there listening to us, know that you can bring value to small, medium-sized businesses, and make sure you contact us, get on to our Thursday 3 p.m. webinar. And then Friday is Spanish. Saturday is my 1 hour. I use Saturday to really hone in things that is important. So this Saturday, I actually have a webinar called Fiasco of Payroll Taxes. I'm telling you, payroll tax is so screwed up with the CARES Act, pandemic, and it is so screwed up. And who else don't have problem with payroll right now? So it is a webinar that I will lay out all the things that's going on related to payroll right now, and get you to clearly understand what problem we have, how you're going to resolve it. And as soon as you know that, you know how to go about getting it fixed. Or of course, you can come to Community CPA, we fix that for you. And that's all for today, and I'm really glad that you're here. I'll talk to you again, and I'll see you again